Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that dump on the Bitcoin chart as well as the, just kind of continuation to the downside on the altcoins as Bitcoin dominance has been pretty high. Guys, let's just jump straight into the economic calendar because actually what we have coming up today is that CPI data that I was warning about in previous episodes as well as in the Discord. Link is in the description of the video below. Guys, we then are followed by PPI data. Of course, both of these are indications of inflation and whether or not the Fed will continue to increase rates. Now, the market is pricing in rate cuts, as I've repeated time after time after time on this channel. And of course, the Fed, as I've also mentioned time after time after time, is hell-bent on continuing to raise rates or keep rates at a kind of pause level. They don't want to lower rates, which is what the market is already building in. That's why we're seeing the dumps. That's why we're seeing the slowdown on the charts. And so, guys, if that CPI data comes in a little bit hot, on Wednesday, if the PPI is also hot, then that could just dump the charts down, and there may be some front running depending on who's leaking data. So be very careful about your positions today. And of course, I'm not going to be officially bearish until we actually break something in the charts. And we did break that wedge to the downside. So, of course, going straight to the charts, I want you to have a new picture in your mind, which is this channel that I have described here. Now, guys, we've talked about this channel before, of course, when we were talking about this potential breakdown. But here we are again, right? So history repeats itself, and here we are hanging on in the middle, the midline of this channel. And essentially, this is something that we've been following along. I'd like to say ever since we first broke down in November. And so, we established the bottom of the range, we established the middle of the range, the market, quote unquote, double bottomed there, and then explored the top of the range, retested and confirmed the mid-range, right? Continued to break down, confirmed the bottom of the range, and then now we have confirmed the top of the range. So the question is, now that we have at the top of our range confirmed, we also have the bottom of our range confirmed, and we have the midline of our range confirmed, is it time to break out of this range to the upside, or is it time to break out of this range to the downside? Well, this is the question that everyone has in their mind as we've been kind of trapped in that wedge that I was showing you for several episodes. And now it appears that we're breaking to the downside. And since we're breaking to the downside, everyone's going to be asking, well, does that mean that we're going to fall to hell? Are we going to fall to $13,000? Are we going to fall to $11,000, to $9,000? Is the floor going to be kicked underneath us? Well, guys, those guys they don't know, okay? They don't know. Remember, going sideways on a chart is the same thing as going down. And so what we could be looking at, okay, this is just one possibility, is that instead of dumping, right? Instead of dumping all the way to $9,000, or some guys are saying $4,000, instead of dumping all the way down there, it could be that we just go into a massive consolidation sideways, maybe for 2 or 3 months. Why do I suggest 2 or 3 months? Because if you look at the size of these structures that Bitcoin likes to print, you can see this is November, this is January, right? So this was approximately 2.5 months. This was January. This was March, right? So approximately 2 months. This was March, and then this is now May, so approximately 2 months. So let's say we take a big dumpola, and then we just start to kind of carve out an area. Well, that could take 2 months. It could waste 2 months of our lives wherever we end up, right? It could take 2 months of our lives, and it just wouldn't necessarily be the fastest process. And I know everyone's looking for those, really fast moves up to, 35 or 42 or 50 or whatnot. But guys, sometimes you have to build in structure, okay? So we have to talk about the reality of what's on the charts. And when we talk about building structure, charts are very weak when they go straight up, because look, they can fall straight down also, right? If they pop straight up, they can fall straight down. So unfortunately, there's not much structure along these type of candles, for if you happen to have a couple weak moments in the chart, for us to hang on to. Now, luckily, we built structure over here, and so there is that area, somewhere around $24,000 to $25,000 that could potentially hold us. There is this area right here around 25,500. There is this area around 21 to 22,000, which is one of the targets that I mentioned was in my mind a while back. And of course, we also have this kind of structure down here, which could be around like 18,000. So these are just levels that we could be looking at. Should we dump? And then I think that the first thing that we should be looking at is this channel, this diagonal channel that we've been, carving out. And should we dump straight down? Because of course, what goes up can come down. Then of course, the first area that we'd be looking for is anywhere in this range of 25 to, let's just say we have like a scary flash wick, right? All the way down to, it could be somewhere around here. We could even go as low as, you know, 21. So I don't know just how scary the markets could get. Okay. A lot of this depends on other factors in the markets, but it's not unusual to have these kind of weird, kind of like scary wicks. You see what I'm saying? And so that doesn't really define the market, these wicks, okay? It actually gives you a good clue that there's buying pressure. And so if we do get just some type of a scary wick down here, it's not necessarily the case that we're breaking all the way down. We could just be making some type of buy pressure that then takes us back up, okay? So just be careful about that. And if you want to protect your positions, then the place to be protecting your positions was at the edge of the wedge that I've been talking about for weeks, okay? And so as soon as we broke down from the edge of that wedge, you probably just want to, protect some of your positions, move your stop losses up, take a little bit of profit if you had bought in lower. Just understand that this thing could break down. And of course, if you were even more clever, you would have done that at the top of the wedge at resistance. It's a little bit late when you do it when you're breaking under support. Okay, you want to usually be taking your profit regularly at resistance. And so, had you done that, maybe you would have seen that there was a midline through here that lines up with all of these wicks over here that we're kind of talking about, and you would have just really started to be taking your profit in this area in general already. Should you have been buying with me when I was talking about, that 16,000 and that $16,500 level. You may have been buying in around that time, or when we started to break up here or whatnot, when we made a higher low, and then you would have taken your profit up here when you saw all this chunky resistance. Okay, so we're still in that neighborhood. It's not too late to take profit if you did get those nice entries. Of course, if you were buying in the middle of this range, right, like an absolute degen, right, at our most, powerful resistance that you could possibly imagine, then that's a little bit late. You should have been taking it precisely at the top of that wedge that I've been talking about for the last couple weeks or whatnot. But guys, we are breaking down from that wedge, right? And so there is a greater chance that we're going to continue to the downside. Now let's go ahead and throw a pattern on this because these are pretty much my specialty these days, even though, usually, I don't like to just pattern trade. I'm more momentum and volatility trader, but patterns, they tend to work out. And everyone right now is looking for this head and shoulders, okay? Now, first of all, that's fine. Yeah, this could be a head and shoulders, and the measured move. I'm on log because these channels are on log. If you leave log, you can see this is the measured move of the head, and it will bring us down to this area that we're looking for. You can see this channels got distorted because we had a parabolic movement. Okay, guys. So I'm keeping the channels on log. It makes a lot more sense. And what you can see is we had a similar type of breakdown on a head and shoulders. And so people are saying, aha, this fractal is playing out. That fractal that I warned you about, Alpha Fam, it's potentially playing out. But hey, not so fast, okay? Not so fast. Just like we had to wait for the wedge to break, okay? Just like we had to wait for this wedge over here to actually break until we could confirm that this thing was entering some type of a new type of structure. And look at that. The bottom of that wedge works perfectly with our midline here, kind of validating our hypothesis of this channel. We're now dipping into the low mid regions, but we haven't broken the low mid regions. And what a coincidence, okay? The measured move on the head and shoulders would actually take us to retest the bottom of the channel, also suggesting that there is some validity to this pattern. But the reason why I say not so fast is because there's a key difference between this head and shoulders, right, and this head and shoulders. What's the key difference that you can see, Alpha Fam? Oh, hey, look, that right shoulder is massive. It's gigantic on this head and shoulders, whereas over here, it's a very tiny. Why is that important? Well, it's not entirely important because you still have the lower high. And so if you have a lower high, right, and then you have a low, and then you end up putting in a lower low, which would happen underneath the midline. Wow, what a coincidence. Then you're going to have a downtrend, okay? A downtrend would suggest that you're going to make another lower high, and then potentially you're going to carry out a drop move, right? So that's going to be a downtrend no matter what if we establish that lower high. But the whole point of head and shoulders are to show, just ignore the top of the head and shoulders for the time being. That's relevant for the measured move, but it's not relevant for what we're really talking about, which is that overall price action is moving to the downside, okay? And what we can clearly see in this head and shoulders is that, in fact, if we ignore just the head of it, for the time being, price is actually on average moving to the upside. And if I get rid of our kind of a channel there, you can see it a little bit more clearly in that this bottom, okay, this bottom started all the way over here, and then it had one here, and then when it broke down, it was down here, so that was a down-sloping line, okay? But if we take a look at this one, you can see we had a low right here, and then we had a higher low, and right now we still have a higher low. Do you see what I'm saying? That why you can't be a perma-bear? You have to think for yourself and don't let this market just kind of bamboozle you, right? Based upon the emotions of whoever you're looking at, whatever influencer. Okay, we have to be able to think for ourselves. And the overall price action was down here on average in this head and shoulders. And in our current pattern, the overall price action is neutral. It's neutral, okay? We're pretty much where we were before. We're actually higher than where we were before. And in some cases, we've been pushing on this right shoulder significantly higher than where we were on the left shoulder. And so that implies that there's a greater likelihood of a failed head and shoulders. And that's why you see this measured move to the upside up here, because if we throw our trend back on, we also have the opportunity to recover this level because we are making higher lows. I mean, it's almost imperceptible, but we are making higher lows. And so if this thing is still in a possible uptrend, then we're going to recover the wedge, and then the failed measure move might be to the top of our channel up here, or at least one of these levels conservatively, okay? And so that's what I'm going to be looking for. You'll know that this measured move is going to play out to the upside if we break the top of the right shoulder on the head and shoulders, which would be somewhere around 30,000. Let's just call it 200 just to be conservative. And then you're probably going up to 32 to 33,000. And while everyone else is super bearish, I'm giving you that perspective because this is trading. We have a hypothesis for the downside and we have a hypothesis for the upside. We don't care which one ends up working out because we have a plan for both of them. We are not bears. We are not bulls. We are clever little alpha monkeys. We are traders. Okay? We are not cheering for one way or another. We're going to make money whichever direction it goes, and only stupid people try to claim that the chart can only go down, and only stupid people claim that the chart can go only up, okay? Up only. And the reason why they're so stupid is because markets inherently have randomness, okay, built into their volatility. And that's simply a mathematical function, okay, a probabilistic function of the fact that if everyone is targeting the same number, eventually it will become extremely profitable for at least one person, and usually it would be a super wealthy person, right, with a massive amount of money to trade against them with all the benefits in their favor, because markets hate when the majority of the participation is going towards one number. It all scatters, and whoever this is why we get short squeezes, right? This is why we get all of these strange functions of the market that kind of, trick people, confuse people, and make people otherwise frustrated who don't apply proper neutral TA principles rather than just being a perma-bear or a perma-bull, okay? So right now, it's going to be very profitable for the upside to play out because everyone and their mother and their mother's dog is looking for it to drop. Now, could it still drop? Yeah, it could still drop because there may be fundamental reasons for it. There may be reasons why this market drops. It just doesn't mean that it has to happen. Now, the fact that it's already started, that the conditions, right, this head and shoulders are conditions, have now been validated by basically testing the low. And to be honest, we're going to need to make a lower low for it to be properly validated. Just want to say the idea was validated, okay? The conditions were validated, but it hasn't been confirmed. And the only way we're going to have it be confirmed is the validation of a lower low, and then a confirmation that we start to move in that direction. You might as well be initiating a short at that point, and the likely target is going to be in that $24,000 range. Okay, now You know, can I get a little bit more super precise? Let's see if I can just change this one to a line so I'm not making any mistakes here. Conservatively, yeah, conservatively, yeah, I mean 25,000, 24,500. Let's just go with like an extreme. Just take the whole structure here, even this kind of wrapping kind of area, which is kind of wrapping around the midline. I don't normally count those, but we can count that. It's like this one's kind of like just tapping this. It's not really part of this price action per se. But if we take the extreme just from the low to the high here, and we drag it down to where it would break down from, which would have to be this area right here, then we're going to be talking about a low as 22,000. And if we take it from this low, then as low as, yeah, 22,000, 22,500 is, the most generous I would be with this type of drop. And then we would end up in this area. And what I would hope would happen is that we would end up putting in some type of accumulation structure, okay? You can see we put in this kind of distribution structure up here and then put it down. But then we just popped up, right? We put in this distribution structure up here, and so that really increases the chances that we're going to drop, okay? Because we've just built up that structure. We didn't build up any type of structure to like pop up, right? We didn't build up any structure to pop up here. That was just craziness in the market. And so it does make sense to retest that area. Look down here, right? We made nice, beautiful structure, a nice, beautiful accumulation structure. Not just once, but twice, right? With a higher low. And so that made this nice accumulation structure, which then took us on this brilliant ride to the upside. But have we done any of that yet, Alpha Fam, over here? No, we have like one kind of like pop-up, and the rest is distribution structure, which suggests to the downside. So we have to be realistic also about what the chart is doing and what it's capable of in the short run. And it's not very likely that a couple of distribution structures are going to break through your massive resistance over here. And so if we do have a drop, what I'd like to see us do is just build up some type of accumulation structure, some type of accumulation pattern that ends up taking us to the upside. And even if we ended up doing it twice, just like we did at the bottom here, even better, even better. And then we go on our massive run to the upside, and who knows, maybe we keep going, okay? But we have not built a proper higher low yet. Okay, and I would be looking for that type of proper higher low should we drop down now. I am still open-minded to the possibility that that's not going to happen and that this is going to be a failed head and shoulders. It's just probabilistically, it's not necessarily the most likely case. The most likely case is that we continue to the downside, Alpha Fam. Okay, I don't want to like mix words or anything. I'm just saying that we have to be open-minded. That this structure is pushed to the upside to like maybe 35K or whatnot. That maybe that's not over yet. Okay, we may have one more push and then maybe we drop, okay? Or we flip this, and now we're talking about a whole new channel, okay? Or we have to redefine how we're drawing channels. But for now, this is basically what we're talking about, with a pretty sizable variance on what could happen down here, okay? So this is just my hopium. This triangle is just my hopium. That whether we end up down here, that we build in that structure, or if we end up down here, that we build in that structure. sort of like this over here, right? Maybe just try it again. And if it fails and we end up making a bear flag, then yeah, we can talk about double bottoms or maybe even significantly lower. And there's reasons why to suggest that, but not yet. Okay, not yet. Let's see here. I think that's pretty much all you really need to know in terms of what's going on. You can just use this wedge. You can use this midline. And then you can see, oh, do we flip on top of the wedge? And do we break the high of the right shoulder? Okay, that's literally all you need to know right now. We're on the 6 hour. We can take a look at our EMA structure. And you can see that, yeah, we have some support here on the 200 and the 300, which is also where we had support the last time we broke down. And squeezing through that to the downside, which we have almost the same, I mean, Lord, we have almost the same squeeze going on here, okay? Then, and you can see it being breached already through the 200, so that, that's basically like right here, right before the drop. Don't say I didn't warn you, right? Right before the drop, right? If we do that through the 300, there's a good chance that we're going to come all the way down here. Look at that. Look at that. 24,000, 600 is right here at our 800 EMA. And then look at this one right there at that 22,000, right? Which is what I was suggesting. So again, like the EMAs are also your friend, and this is a momentum-based strategy. EMAs. We're looking at price action previously, but now we're starting to look at momentum. And let's jump over to the daily. And on the daily, we can see, well, this is nice. On the daily, those are much tougher nuts to crack there, that 300 and the 200 on the daily. So that does suggest pretty sizable strength at 25,000, 24,500. Okay, and then look at this. We have the simple moving average and the 300 simple moving average and the 200 simple moving average at 22,000. Wow, what a coincidence. Okay, like so the charts on multiple reasonable time frames to be trading on has significant support at 24 to 25 and basically 22,000. Okay, let's go over to the 3-day just to see what we got going on here. The 3-day has support at that 24,500-ish area, but then it suggests that you could, wick as low as 18,000, maybe even 17,000. Okay, and then you're going to have to play it by ear from there. And the 3-day does close today, and we'll check out that chart. Let's see where the weekly has its support. Weekly having support. Look at that, $21,000 to $22,000. Okay, so again, like there's this kind of critical support at 22, and then look at all the support at 25. So the charts are telling us they have a backup plan. No, we're not just going to dump straight to 10,000. No, we're not going to dump straight to 4,000 or whatever. Okay, we have a couple levels here that we can deal with. We have a measured move of that potential head and shoulders. And I know I'm repeating myself, but it's just because there's a lot of, perma-bears out there. A lot of people just are thinking this whole thing is going to die. And I'm just not ready to pull the plug yet, okay? It's not an emotional attachment. I'm just reading what the charts are telling me, literally. And not only do we have the possibility of a failed head and shoulders because of the price action that I was talking about, but also we have critical support at key levels that would give us a higher low should we end up building structure there. And again, that would be bullish. So let's go ahead and just drop back down to the 6 hour and give you some key levels to be looking at. Let's remove this trend. Let's remove these lines that I just drew. And let's remove our EMAs. You can see that breaking underneath the Bollinger Band's midline was also very telling for us. Okay, so that's one reason that I have this on here. Above that band, look, we could skyrocket. Below that band, look, we could drop to hell, and it works better on the mid to high time frames, like the daily to the weekly. Beyond that, it gets just pointless almost. Let's see here. Let's go to the let's look at the old 6 hour just to see what I was suggesting previously. This may not be the one that was in the last episode. This might have been the update right after it, but the levels were almost identical. We were up here, and what was I telling you, Alpha Fam, right? I was telling you that we have to hold on to 29,120. We have to flip that area. Otherwise, we're going to be underneath the alpha momentum pool and underneath the volatility pivot here. Okay, and you don't want to be underneath the volatility pivot. If you get underneath the volatility pivot and the alpha momentum pool, look what can happen. Okay, don't tell me I didn't warn you guys. Don't tell me that you're not using these key levels. You just got to pay attention to two things. Where's the volatility pivot and where's the momentum pool? If you're underneath both, look out below. If you're above both, you probably have a good chance of pumping, over the next couple of candles, assuming that it keeps moving, right? You don't want things to stall out, obviously. And this one just completely dumped on us. Okay, we must have been on this candle and must have just dumped, and then we had to talk about what was going on next. It did sit on this bearish control zone. You can see this candle right here sitting on it. Okay, and we had wicked down to it before, tested it before. Second time, broke through it, lost the bearish control zone. Now bears are in control on the 6 hour from this previous reading. Remember, this is the old one. This is not the new one. Now, let me give you some updates because look, we're at a new level, right? This was for this level. I don't have to give you a million updates. The levels hold pretty consistently. But once we have a drop, then, it's time to get some new 6 hour levels up here. And so let's go ahead and throw on the new levels because every day is a fresh day in trading. And what you can see is that we have a significant chance of grabbing that volatility pivot, which is currently at 27,600. We got a little bit of a Darth Maul action on this current 6 hour candle, which is going to close in 3 hours. Just kind of spiking to the upside, spiking to the downside, kind of faking people out, right? But if you look at the center of gravity of these candles right here, currently the center of gravity of it is actually above the volatility pivot. And so should we not, just completely engulf this candle and break down, then, we would have the opportunity to just in baby steps flip this volatility pivot, flip the momentum pool, go swimming around in it, maybe flip the general continuation line. And then we would have a shot at doing a mean regression up to the Bollinger Bands, okay? And then also up to the neutral point of control, possibly taking out some of this liquidity before maybe continuing to the downside should we get rejected there, or flipping that area and then having the chance for the bullish control zone, which of course would probably correspond with the top of this shoulder that we've been talking about. And so if we were able to flip that bullish control zone, then we could be talking about the failed measured move of the head and shoulders, which could potentially end up skyrocketing us to $32,000 to $33,000. Now, all of this is just a hypothesis. Again, guys, like this channel is about game plans. It's not about telling you what the chart's actually going to do. You can see that we are having a little bit of pressure here. But again, we have 3 hours till this candle closes. You can see not many candles have to go by before this thing just drops to hell. So, this is your heads up. And again, the critical level is 27,600. Underneath that, you're underneath the momentum pool, you're underneath the volatility pivot, and you could just go on another wild ride, potentially that measured move down to 24 to $22,000. Assuming that that structure at 25 doesn't hold us up, that 26,500 structure, which they have a chance. It's just, is it going to do it or not? We don't know, because we have pretty reliable patterns here. And okay, so those are your key levels. You're basically going to get ahead of the momentum pool should you get above, a 27,000, 900, 28,000. I think 28,000 is a reasonable target. You get above 28,000, you have a good chance of going to 28.5. Okay, and then you can play it by ear from there. Let's see here. All right, let's go to the daily, guys. Get rid of that new 6 hour there. Those are your key levels for the 6 hour. So on the daily, we're going to see that we do have a lot of liquidity in this area from that drop. And so that does improve the odds of a mean regression even before a continuation to the downside. So we are going to be watching the momentum pool of the daily chart to see if we're able to, on the 6 hour, grab that that volatility pivot eventually. Maybe if not this candle, maybe the next candle. And then if we're able to do that, then if we could close the day on the daily, okay, in like 8.5 hours above 27,700, then that's going to be a good chance for us to just go swimming in this area, maybe grab some liquidity, maybe grab the neutral point of control at 28,600. Better to grab the general continuation at 28,700. Even better than that, grabbing the additional momentum, which would be kind of your front run signal at 28,810. And then just if you want to be on solid conservative ground, then you're going to want to be above 29,000. And then there's a high likelihood being above the momentum pool and the volatility pivot that you're going to have a chance to continue to pumping to the bullish control zone at 31,000, which again, if you take out, that could take us to 32 to 33,000. So just by those failed measured move standards, and also by the channel that we had carved out. Now the bearish control zone on the daily takes place at 26,700. You can see this aligns pretty much with these wicks over here. And so where we're really going to go for that scary ride is if we take out these lower wicks. Of course, on the 6 hour, we're going to dump if we take out these wicks. But, on the daily, we're going to really dump if we take out these lower wicks over here. So that's basically where these things are mathematically being derived from. So I think that's enough for the daily. Now, one of the cool charts that are ending today, I always love the higher time frames when they close, is the 3-day. Because first of all, you can see that on the 3-day, we're already violating the Bollinger Bands to the downside. So, we haven't lost it yet, right? Just like right here, that's where we lost it, and then the next candle sucked, right? So we can recover this candle, okay, in 8.5 hours. We can recover this candle in 8.5 hours, but if we don't, and we close under the Bollinger Bands, then just warning you guys, the next candle could suck, okay? Like it just tends to happen there. You see, we lost it here, right, to the upside, but we actually recovered it, and so we stayed into this area, right? It's basically the opposite could happen up here. Okay, we could basically do the opposite that we did down here, just up here, should we recover that candle before the close. But it looks like, in our current position, it's not very strong, and statistically, we're more likely to go on that ride to the downside. You can see we may have a second chance as long as we hold the lows of wherever this candle closes. But if we violate the lows of it, then there's a good chance we just go on that wild ride, okay? So there's a little bit of perspective on the 3-day. Let me show you the old 3-day that we had a while ago. Might have been a couple weeks ago, whatnot. But you don't need to update these too often. Again, we were in this zone, so we only really need one 3-day chart for this zone. The levels, pretty much continue to play out. Of course, it's good to have updates if you've made like a little bit of a structure and then you have another structure going. But you don't need to just think that you have to have a new level every single day, right? We made it over here on this candle, probably somewhere around here. And then look how well these alpha momentum pools, the alpha momentum pool and the alpha lines, right? The alpha scale over here has been holding up. Look at this. We pushed right to the general continuation off of the hold momentum level. So we defined a hold momentum off of the close of this candle. This candle respected it. It went all the way up to our general continuation. We had a wick all the way up to our add and lose momentum level. And look what we never did, Alpha Fam. This should have been your first clue, right? I gave it to you all the way back here. In April 25th, the first clue was we never flipped the volatility pivot of the 3-day chart. 30,700 was the number we needed to beat. And so all of this since then has just been trading the 6-hour and the daily, maybe the 2-day, okay? Like just trading those things. Because we never did anything interesting on the 3-day. We've just been swimming in the momentum pool. And look at this, okay? Not only did we fail to get that volatility, wouldn't it have been nice to know this number in advance? Wouldn't it have been nice to know these possible rejection levels in advance? We rejected from the bullish control zone on the 3-day, and that sent us down to the hold momentum level where we're currently at and what we're threatening to breach. Look how relevant these lines still are, even today. Look, we tested it, bounced off of it, got rejected again, came back, broke the Bollinger Band, and now we're threatening to go to that neutral point of control at 26,000 and then perhaps lower. Of course, being at the bottom of the range, we kind of built in a nice structure again, just like we built a little bit of a structure here. So it is time to update the 3-day. And here's your new numbers for the 3-day, okay? So this is going to be closing at the end of today. But again, it'll be relevant so long as we hold this area. Should we fall down, then yeah, I'll give you a new 3-day update next time. But if we just end up going sideways right here, then this will still be pretty valid, okay? For maybe even a couple weeks. But guys, the volatility pivot is at 29,235, which again, the failed measured move of that inverted head and shoulders on the 6-hour and daily, that does put that within our reach, okay? And so we could re-enter the momentum pool within the next 8.5 hours should something crazy happen, right? Crazy happen and we just reverse course, we could re-enter this pool. If we capture above 29,235, then I would think that we do have that chance to push to the upside. Now that's only going to be validated should we get above this kind of continuation level around 30,000 there, 29,800, 30,000. And then, the liftoff from there will be the confirmation. But this is what I'm seeing on the 3-day. Our current neutral point of control is around 26,700-ish. So if we wick down there, get a little hiccup, then that shouldn't be unexpected. But as you've seen in the past, sometimes we just blaze through the neutral point of control. It's not the strongest line, okay? It's just the middle of the RSI. That's all. It doesn't really mean anything. Just sometimes we get a nice bounce around it. And then, but we could continue to push down. Now, where do bears get into control? Oh, look at this, 22,644, where we do have that nice liquidity down here that the 3-day might want to just come down and grab, okay? Fuel itself for a potential continuation to the upside and run up, okay? Just bamboozle people to the downside. But isn't that just really in confluence with our EMAs on the 6-hour and the daily and those other EMAs, right? So even though we were talking about how the 3-day doesn't have any critical support at the 22 level, and it was suggesting the backup plan for the 3-day is 18,000, whereas all the other time frames said there's something around 21 to 22. Lo and behold, based upon the momentum scale, right, the alpha momentum scale over here, we do have something at the 22 to $21,000 area. We have the bearish control zone, which we could get a bounce off of. We could reject the bearish control zone, and the bulls could make their final play in this area around the chart there, and then we just try again. Okay, after making that high, make a higher low, right? Higher high, higher low. That's going to be a continuation of an uptrend, and then we have a second chance to squeeze through these 200s and these 300 EMAs on the 3-day, which is just going to be this kind of like massive accumulation wedge, which could just take us on a pretty wild ride, you know, should we be idealistic and bullish about it. So don't fear the don't fear the pullbacks, Alpha Fam. Don't fear it. Okay, a lot of people are going to try to make you terrified. I'm telling you, like even to the downside, there can be some upside to it. Looking for that higher low. Good for that structure, not a wick. We're looking for structure, right? We want to build that structure. And yeah, I would prefer also to pump up to $30,000 to $35,000, where we have our 200 SMA and 300 SMA on the 3-day chart. Those are great numbers, you know, 30,000 and 35,000. I would love to pump up there before we have a pullback and build structure so that we just continue bullishly without any pain in the charts. But sometimes a little pain is the price that you pay for access to Mr. Toad's wild ride, right? And of course, this could still be, you know, this still could be just a lower high and a lower low, all right, on a massive downtrend on the macro. And so there is that possibility that, especially should the stock markets capitulate, that we end up, you know, filling out this kind of, you know, this kind of falling wedge here with something on an order of magnitude as this, right? And then that would take us to that, you know, conservatively, depending how fast this is, right? Because obviously the speed of it, you know, straight down would be that kind of 13K area. Kind of a pretty fast fall would take us to that kind of 11K area. You might get a wick, right? A flash wick, something like that. 8,000, 9,000, 10,000. And then just depending how slow it is, if it's just a slow bleed out, right? Like this one was a crazy slow bleed out, okay? Let's just say we do something similar to that crazy slow bleed out. Then you see why some people are saying, you know, like 8,000 and then maybe a wick to like something crazy low just to like reconfirm this kind of stupid candle, okay, on the virus era. And then from there, you know, we could pump. But as I mentioned in one of my last macro videos, don't forget that we always have a midline, which we also have the possibility to basically correct off of. And that could perhaps take us down, you know, to a double bottom here, 16,500, right? 18,000. It's kind of a traumatic fall. 19,000, 18,000. Right? 16,500 again, something like this. 18,000 would be a reasonable target for a midline, okay? And then we could just have the breakout, right, to the upside, and that's just another higher low. And then we get that higher high, maybe at 35, and we get that accumulation that I was talking about, right? That accumulation structure, just like we built it up here, we could build it up here. And then that's a beautiful base, right? That's a beautiful base to launch a bull market off of, okay? And so guys, this is how I'm thinking about it right now. I don't really see us just dropping to hell. I think we have multiple shots at building up a bottom of this market, and that we're still working on that. So, let's see how it goes. Just gonna get rid of this stuff. There we go. And I think I've pretty much covered everything that we need to cover. We are dropping a bit again. Just go over to the 6 hour. Just show you how we're getting a little bit heavy there on the EMAs based upon this price action. We're under the 4, we're under the 9, we're under the 21, we're under the 200. Bearish, 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 bearish. Okay, so it's just bearish right now. But we've got the 300 somewhere down here. Okay, it's just gonna kind of little possibility for a bouncy area. You see how these EMAs play off of each other. You caught this one, you lose it, you bounce off the next one. Okay, bounce off that one, you lose it, you bounce off the next one. Okay, bounce off this, you lose it. Well, maybe we're gonna try down here first. Okay, we'll see how it goes. But this isn't a great look. And then on the daily, just again, under the 4, under the 9, under the 21, under the 800, bearish, 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 bearish. But you got that support at the 89 down here, that 27 to 26.5 area. Okay, just our first kind of stop. These wicks down here, first kind of stop is probably going to be in that area before we make the big decision. And don't forget that we have this liquidity up here that we could possibly have a mean reversion before that plays out. That could screw people. You don't have a confirmation to the downside until you break the neckline. And currently we're making a higher low. We haven't broken the neckline, and we haven't made a lower low yet, which would be the start of a downtrend, right? I think that we could just briefly take a look at volatility on the daily. And yeah, we got a volatility flip. Okay, this is a proper flip. Something's going to go on here. Let's take a look at this. Just collapse this one. So this was taking us sideways, and now our volatility is expanding, but price action is going down, so we're expanding to the downside. Okay, I don't like that on the daily. 6 hour. Yep, this was our, basically this was our consolidation. Very weird structure on that volatility. It was very hard to read that one. Just consolidation sideways. We got an expansion to the downside, and now we're having a little bit volatility flip. It's not confirmed really yet on the 6 hour, but it does suggest that that mean reversion could come into play. We're gonna have to watch this one on the 6 hour. The 6 hour could do something tricky right now. You see this? See why I check this stuff out? 6 hour could do something tricky right now. So just be aware of that. And you can see like the DI is starting to move up a little bit. The DI negative is softening as the ADX is softening. We haven't made a lower low on the RSI yet. We're having a volatility cross. And we are getting, we're bearish right now on this stochastic RSI on the 6-hour, but it is in that region where it is kind of typical for it to start to flip up bullish. So if the 6-hour is doing something tricky, just watch out for that. We could get a little dip and then pop back up, or maybe, just throw a little curveball in there and get that mean reversion before perhaps the daily and the 3-hour decide to really show their cards, okay? Just want to put that out there. And then let's look at the 3-day, since we looked at the daily. And since the 3-day closes today, look at this. Well, this is so interesting. So we had this massive expansion from 20,000 all the way up, right, on this volatility expansion, right? This price action moved up all the way to, that $31,000 area. And then we've been consolidating all the way to right here. And this isn't out of the woods yet, okay? This is still consolidating, and it could be consolidating to the downside. So there could be one kind of blitzkrieg move to the downside left, or just any type of tricky action right here. Because this is consolidation. Consolidation means usually sideways, okay? So it doesn't have to be down. It could be down or sideways, or a little bit up. And to consolidate after a push up, you're usually going to head down a bit, right? Just consolidating a bit downwards. It doesn't mean you take out the whole move. It just means you're consolidating downwards. And so yes, we could have a little bit more consolidation to go. But this one suggests it's going to re-enter an expansion phase. And the previous expansion was also off of those lows on the chart. So we had an expansion here, took us all the way up from 16 to 25, consolidated, that dropped to 20, and then pushed up to 31. Consolidated, we could drop down, and then maybe we have another push to the upside. Okay. Right now, it doesn't look like it's in our favor. Stoke is down, still consolidating potentially to the downside. RSI still pointed down. DI negative, still rising, which is not good, right? So underneath the Bollinger Band midline, not good. So we're still consolidating to the downside on the 3-day, but I just want to show you, we do have the possibility for a flip. And the last time this happened, we got that same apex there, and then we had 2 candles down on the 3-day, mind you. So that's like a week's worth of pain, okay? We had like a week's worth of pain after that, and then the volatility flipped to the upside officially, and then it was up only from there. Same thing on this one. We kind of came down. We had a couple candles right at the apex of the bottom that pushed it down. So basically like a week of pain. And then it was just up only from there. So right now, just based upon what I'm seeing on the charts, I'm seeing potentially, 5 or 6 days of pain should we break that neckline on the structure that we're talking about. And then we have another chance to actually pop to the upside. Assuming that this just doesn't get invalidated in the next 8.5 hours. In which case, if it does, right? If it does, and that 6-hour inverted head and shoulders failed move plays out, then we could just rise to where you see this 300 SMA, maybe even to 35,000. Okay, so this could be just a fake out. Just be aware of that. We're not in a clear territory yet. We haven't broken this low yet. If we do that, then yeah, probably a week of pain, in my opinion. CPI data on Wednesday. PPI data on Thursday. Guys, that's been your alpha. Stay safe and happy trading.